Good morning. Let's start with Evergrande. What are you hearing? What are the rumors like?
Yeah, morning to you. Well, it is very difficult to speculate, what is really going on with the company. But, recently there has been too much bad news surrounding this name. And so far, investors are bailing out of, the name, in its, from its debt and equity. So, it seems to many that it is one of the risk factors that the market is watching.
Right, and we were just talking about how it's one of the biggest heavily weighted companies when it comes to the Bloomberg Barclays Index of Asia junk-rated dollar bonds. How does this impact the whole high-yield space right now, Hao? It seems like, for the most part, it's been quite resilient. Does that change?
Well, many of the high-yield names are issued by property companies, and recently the policy on the property sector has changed. Normally, when the Chinese economy slows down, the government would try to use property as one of the stimulus package, right, to boost the economy. But I think this year, the policies on the property sector has remained very tight. So it really remains to be seen how risk appetite will be affected, even though the market is treating the Evergrande bond as sort of an idiosyncratic event.
Okay, Hao, let's talk about a broader A-share market. So far, there's been a lack of momentum. We haven't seen that quite build just yet in terms of price. The favorites have been so far defensives, if you will, plus, of course, the small cap tech space. Do you think that changes in the second half?
Yeah, I think the Chinex and the tech board has going from strength to strength, because many of these names listed on these exchanges are not available anywhere else, right? So most Chinese names listed in Hong Kong and also in the US market are mostly internet names, right? So they are big internet platform companies. But many of the semi-names, for example, many of the new energy names, they're actually listed domestically here on the Chinex board and also in the new tech board as well. So it's not surprising to see, as the government's work focus is shifting, right? So from a sort of a software, internet-based strategy going into a semiconductor, high-end manufacturing strategy. So many of these names listed domestically are benefiting from the policy support.
And what about when it comes to cyclicals? Because we've seen quite a bit of outperformance there. It's different how you look at cyclicals in China versus where you're seeing value here too, right?
Yeah, that's right. I mean, those names has rallied really hard in the past 12 months. So it's not surprising to see, some people want to take some profits off the table. But I think going into the second half, it's quite possible to see some form of physical expansion. So even though the government doesn't want a commodity price to rise out of control, but if you have some form of physical stimulus, it will induce at least a small rally in the commodity sector as well. So I think that is the reason why we are seeing some small scale of strength in the sector.
Hao, so we were digging through some data earlier, and this is quite curious. I think you'd be the perfect person to answer this question. Margin debt is at a 6-year high, so that's continued to just go up. But the CSI 300, which usually goes alongside that in either direction, has remained stuck. Why do you think that is? Yeah,
well, the memory of 2015 stock market bubble is still fresh. Right, so back then, it was the margin debt problem that sort of being one of the catalysts of the bubble burst. I think coming, after 6 years, after the bubble burst, the capitalization, right, the free float capitalization of the Chinese market has expanded dramatically. Right, so even though now, if you look at the absolute level, the margin debt is at a relatively high level, but then once you do the ratio relative to the market cap, it is not that high. So I'm not too worried about that.
Okay, you don't think that policymakers are worried about that either? Then, is there any kind of signs that potentially you mentioned that we might see some form of easing? It wasn't in that LPR. What else could we be seeing in the pipeline from central banks?
Well, if the economy growth continue to decelerate, as we've seen in the second quarter, Right, so the second quarter GDP is actually below expectation, and I think even though some people was going oohing and eyeing about the consumption number, but I would say that the consumption is still very, very weak. So going into the second half, we had one RRR cut already. I wouldn't be surprised to see if the economy slow further and the policy on the property sector remains tight, then you could see more RRR cut on the way.
Okay, we're entering earnings season, and MSCI China downward revisions in earnings there, 7% I think year to date. The 2022 earnings have been revised down I think about 4 or 5%. Do you think we'll see more of these downgrades to earnings expectations?
I wouldn't be surprised to see more downgrade coming. I think reason being, because the last 12 months has been particularly good, right? So I think not only the Chinese economy, but the global economy is on fire. So it's not surprising to see, some sell-side analysts had an expectation really, really high. But we've already seen some turning in the earnings expectation in early June. So they're coming down from a very high level. So normally it won't stop, here, and it will continue to decelerate. So, and also, if you look into the second half, economic growth is likely to decelerate, continue to decelerate as well. So I wouldn't be surprised to see earnings forecasts continue to be downgraded.